15 assets that are making people rich. Welcome to Lucrative, the place for future billionaires or possibly trillionaires. If you're not subscribed yet, you're missing out. Most of our community is interested in building wealth, so we took a look at what makes up the portfolio of most rich individuals. This one isn't focused on how to make money. Instead, what you do with the money coming in to fortify your wealth. Buckle up, Lucrative. You're about to receive one hell of an education today. But first, the super basics. For those of you new to this terminology, you need to learn the difference between assets and liabilities. Assets put money in your pocket. Liabilities cost you money. The more assets you have making money for you, the richer you are. Pretty simple stuff, right? With that being said, here are the 7 best assets that make the rich even richer. Number 1, cash in a bank deposit is earning you interest. Pretty straightforward. The downside is the interest paid up by banks these days isn't even keeping up with inflation. But cash is still a priority. Apple the company has over $200 billion in cash reserves. That's liquidity. So why do rich people keep such a good portion of their wealth in cash reserves? 2 reasons. 1. Being able to access any opportunity that presents itself, which is pretty self-explanatory. If you think about it, the deal of your dreams is in front of you and you don't have the money to take advantage of it. This is one of the main reasons why wealthy people save cash. The second reason is because they can get higher returns straight from cash deals. Not only do people offer better pricing for cash, but you can also lend money with high interest. This practice is called peer-to-peer lending. If you're low on income and willing to take the risk, there are plenty of platforms out there that offer peer-to-peer lending services. Basically, you lend people your money and they pay you back with interest. The average bank is offering under 1% interest on your deposit, while peer-to-peer lending fluctuates from 7 to as high as 15 to 20%. But please keep in mind that if something is too good to be true, it probably is. Maintain a rational mind whenever investing. No to real estate. This is a big one. We personally love real estate. Why? Once again, 2 reasons. 1. Rent money is coming in every single month with a minimum amount of work. If you're a bit smarter, you can take advantage of the technology improvements happening right now and instead of traditional rents, do short-term rental for higher yields, but it isn't as passive. The second argument is appreciation of population numbers are going up even with the coronavirus outbreak, and more people need a place to live, or rent. The demand is increasing, so prices for properties are constantly going up and they forever, making real estate one of the best investments one could possibly make in terms of real estate assets. You have 1. Residential buildings. People live in your properties and pay you rent to office buildings. People work in your property and pay you rent. 3. Commercial buildings. Businesses use your space to sell stuff and pay you rent for land, which can be cultivated, developed or even left for appreciation. The house you live in isn't an asset. It's a liability. It costs you money to live in it. When governments or businesses might be in need of cash, they can issue up something called bonds, which gets sold to the interested investors. Through these bonds, the government or the business vows to pay the person buying the bonds a certain amount of money every month. Generally, bonds have an expiry date on them from 1 month up to 30 years. These are super safe investments because they're mostly backed by the government. But as you probably know by now, low risk in business translates to low rewards as well. Bonds are usually in the 3% yearly return range, which is better than what most banks offer, but not high enough to get a beginner investor excited when the bond reaches its end. The principal amount is returned to the investor. The main ways people buy bonds are 1. Directly from the Treasury Department, or 2. Through a brokerage firm. Number 4. Stocks. Stocks are not as complicated as those Wall Street firms make you believe. Stocks are an easy way for you to own a percentage of a publicly traded business. If a business issues 10 million shares and you own 1 million of those shares, you're a 10% owner in the business. This incredible breakthrough in financial instruments has allowed the average person to own a stake in some of the most lucrative companies of our day. With very low entry barriers. There are many platforms out there that allow you to purchase this type of share and invested in the stock market. If stocks allow you to purchase shares in a company one by one, mutual funds and index funds bring in multiple companies together, so you're buying into the entire basket of companies as a whole. Why is this better? Basically, you're more diversified, so it's a safer investment to make. Statistically, index funds are the best performing asset class. Index fund. If you want to start buying stocks one at a time, you're statistically more likely to screw up. You're not going to be one of those miracle traders that beats the market year over year. You don't have that kind of info, and it's super complicated to try and compete with the big boys. That's where index funds come in. Index funds should be in every portfolio of everyone who's looking to build wealth long term. Number 6, equipment. Anything that generates money for you or helps you make money faster is considered an asset. If you're a farmer, the tractor is an asset. If you're a programmer, the laptop is an asset. If you're an Uber driver, your car is an asset. Whether or not something is an asset or a liability changes depending on if it had a direct correlation to the money you're generating. Unless your income is directly dependent on the car, buying one counts as a liability. It's very often that people confuse the two. They try to justify it as an asset when in reality, they're mismanaging their own finances due to the lack of self-control. You don't need the most expensive laptop on the market to watch YouTube videos. Number 7, patents. Patents are awesome. For those of you unfamiliar with them, when you invent something new, you can protect your invention by filing a patent. It's a document that certifies you as the inventor and describes in detail what your invention does. With this protection in place, companies have to pay money in order to use your innovation. If they don't, you get to sue them. Patents are incredibly powerful and valuable in the business world. A single patent can make you rich, and all the best inventions are backed by patents. If patents protect your invention, trademarks protect your symbols, words or phrases. It's pretty obvious why this is a big deal when it comes to the logo or the name of a brand. But here's where things get super interesting. If you own a valuable trademark that has a marketable value, you can license it to people to use it for commercial purposes. They pay you in return. With that being said, here are the 7 best assets that make you wealthy. Don't forget to subscribe to Lucrative. Next video we will make another video regarding best assets to own. So don't miss out, and thank you for spending some time acknowledging yourself on financial education with us, Lucrative.